Hey guys, welcome to the Trade Genius Podcast. Bob and Phil here as always. Guys, just when you thought it was safe to jump back in the markets, everything's looking rosy and green, they're laying a trap for you. We're going to talk about what that means for you and what they're up to and what the charts are telling us. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Okay, Bob, so there's a lot of froth in the markets in a very short amount of time, and it's not just the stock market, it's even in crypto. Bitcoin just spiked to like 38,000. But in terms of what's going on in the system, the plumbing, it doesn't seem like we should be seeing what we're seeing. Can you kind of walk us through it?
Yeah, so what we should do here is bring up the first chart of global central banks, got to set the stage here. You don't plant corn going into winter, right? And the central banks are removing liquidity, and the stock market follows the global central banks. And we have basically an alligator jaw here opening, and those jaws will snap shut. And pretty much everybody, especially the U.S., is in QT mode. Japan is trying to defend their bond market now, and so winter is fast approaching. And if we want to go to the first chart, would be let's look at the VIX index, Phil. So this is really interesting to me, because what they did, and we'll show the chart in a second, what they did was essentially use the tool of shorting volatility, which triggers algorithmic buying in the market. So they basically knew that if they suppress the VIX index down, they can get algorithmic buying in the markets just due to robots. And they drove this thing down in 2 weeks, Phil, 36%. And what we got from that is the next chart will show us that. You got this move. I use SPY instead of ES because I trade SPY, I don't trade ES. Is that we got that move down from that big ledge that we talked about down at 4.8, 4.10 area of SPY, and they jammed it all the way back up to try and tag and close the gap they had in the month prior. SPY tagged the gap, Phil. SPX did not, if I understand you correctly.
Right.
And then it just basically, we hit a brick wall.
Right.
And then it came the same day, no coincidence, that they had a 30-year bond auction that essentially failed. I think he got a D price. So now we have to look at, now the market actually gets easier for us, because now we look for pullbacks to fill those gaps as buying areas, or if the market blows right through this resistance area, then we know it's going higher. So that's kind of my view on that. But my personal view is that this was just another massive squeeze, and they're going to roll the market back down again. They may have taken Santa, and just like the retail stores are selling Christmas in October, they may have dragged Santa into October, Phil.
That's certainly possible. I think also, too, we have to keep an eye on the 30-year, right? US 30Y in TradingView, if you guys care to follow that. But if we start getting back over that 5% level, I think it's going to be a problem for the markets. And my personal view is that, how it goes in OPEX, we usually have tailwinds, right? That's only if we're above 4,300. Now, obviously, we're well above that right now on the SPX by about 66 points. But we'll have to see if we start cracking below some of these daily lows that we just put in. That's going to create a bit of a draw back down. And 4,300 is a massive strike for the options market in terms of gamma. So it's a big magnet. But if you start going below that, then there's not a lot of positioning below that. And it becomes a kind of a self-fulfilling prophecy of a slippery slope, much like what we saw going down earlier a couple weeks ago, right down into 4,100. That was was the mechanism that was in play. And then we got that big bounce off that. It was granted it was oversold, but the bounce was big enough to kind of undo some of that and give us supportive flows back over 4,200 and then back over 4,300. But that's only good enough unless we're north of 4,300. That's now a really key level on the S&P 500. And so that's what I'm looking for. But I think that's going to be in jeopardy if the US 30-year is going back over 5%, which today got a big bump because of that failed auction. And I think that's going to be a big factor in all of this.
Yeah, and the other thing too, reason why we were expecting this move to start to fail, other than knowing about the 30-year, is that the breadth indicators were horrific.
Yeah.
You don't get moves like this and have the breadth be negative. That's
Right.
just shows you that they were throwing out the garbage. They were buying the Mag 7, and once that ran out of fuel, we're going to go back down and try to find that level. If you're bullish, what you want to have happen is you want these three gaps to fill. You want it to hold at 4,300.
Yep.
Because it's going to give a really, really solid launching pad for a Christmas rally.
Agree.
But if not, if it just dickers around in here, that's not bullish at all. And then you end up into next year and all the flows change.
Yep.
And so, you want to welcome a bit of a pullback. We got to clean up a lot of what Phil would call bad tape down there. We have volume holes everywhere in this market.
Yep.
And they need to be paved over.
Yep. Yeah, and I think at some point we'll show them a Mag 7 chart. We'll construct it on TradingView because quite literally, I think you have to have that chart up during the day when you're trading because, it's literally become the market. It's the divergence now is so great. You have the Mag 7 and then you have the S&P 493. It's not a joke. That's really what it is. We're almost to the point now where we should just have that as two separate indices because they're vastly different. If you look at the SPX 493, it's a much more bearish chart. And that's the only reason why we're printing up here. So you almost have to really just chart those and you can do that. We'll show you how. And you get signals off of that, which translates probably more accurately into the market moves that we're seeing right now. So
that's all I got, Phil.
All right, guys, thanks for watching. Let us know your thoughts on all this, and we'll see you on the next episode. Don't forget to hit like and subscribe. Check out our specials over at tradegenius.co. We have our Black Friday specials up. Don't forget to check those out. This is our best deals of the year. Much of our stuff is 50% off or more. So check that out at tradegenius.co. Thanks, guys.
Trade Genius.